Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Thursday, January the 24th, 2013. And here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. Want to first start by taking a look to see how the indices closed the session out here today. The Dow Jones was up 46. The NASDAQ was down a little bit over 23 and a quarter. Basically, it was down 23.29 points. S&P 500 pretty much flat, was up 0.01, up a penny. If we take a look at the breadth today, breadth was in favor of the bulls. Today we had 3,513 issues advancing. We had 2,668 issues declining on the NYSE, NASDAQ, and the AMEX. Taking a look at the market today, we did have a lot of action going on in the room here. We were nailing trades left and right in the market. We actually even nailed the volatility index here in our chat room during the day. We got involved around 2275 with a stop at 2260, and look at this boomage right here. Once we were able to spot the top in the market, which worked out pretty well, and I'm going to show you guys how we were able to spot the top in the market and how this was a high probability trade that our traders in our chat room, My Wall Street TV, nailed with the help of course, myself, Channel Guy Trader, and the rest of my team that we have in that chat room. And if you're looking to get into that chat room, you can email me at ccooper@wallstreettrading.com, and I'll see if I can give you the credentials. So in any case here, let's take a look at the market. I was not able to do an intraday market update video today here, so therefore I just want to show you what took place on the ES, and we'll take a look at the daily chart real quick. But ES, you can see we were strong right out the gate. The key level to watch was around the 1491 level. We had buying come right in on the open, 1491. We broke through that little double top area, all right, and then we traded all the way to a high of 1498, 97.75. All right, our resistance 3 that we had was 1495. That if we broke past 1495, we were looking for 1500. But obviously, if big money's been involved to the long side in this market, they're going to have to sell. They're going to be selling in front of that 1500 key number. So some sellers came in right here. So once we saw this nice little inverted hammer on the this little topping tail, you could call it whatever you want, on this 15-minute chart of the ES, I told my guys to watch out, because what's most likely going to happen is that they're going to come out, take out these stops right here, and then sell the market off, because this, just risk to reward, get along the market up here. Doesn't make sense. So we were looking for the reversal intraday, and all these clues give us that signal. So now you're probably asking, okay, what's the major signal that we got us to that gave us a clue to basically get short the SPY, get long volatility? And I'm gonna show you here. I'm gonna show you right now here, based off our charts. All right, if you come to our chat room, we usually have watch the ES, which is those two charts I showed you right there, the 50-minute on the left-hand side and the 5-minute on the right-hand side. But I also have the ETFs up, such as the Qs, the IWM, and the SPY. All right, and one key trend line that we've been watching here is this key trend line right here. I'm going to show you guys right now. It comes from this action right here. All right, this was an upward channel that was in play back here the week of the 11th, January the 11th. Right, and this is why it's important to leave key trend lines on your charts. All right, because look what happened. We were not able to break above this key trend line at all. Every time we came close to it, they sold it off. Came close to it, kind of close to it, they sold it off. Oh, came close. This was the key. This was the key right here, the clue, right here. This candlestick right here on the 15-minute chart. See if I can zoom in for you guys a bit there. Sorry about that. 1 second. All right, and then this was the second clue. So this was a key trend line from about 2 weeks ago that still, held its relevance and gave us a nice signal to get short the market, which we nailed right here. And we got long that volatility. And if you follow me on Facebook, you can find me under Chris Cooper, or you could go to my my business page, Channel Guy Trader, and look to see who the moderator is, and it'll probably bring you to my page. But I was actually calling out I actually called the VXX trade out on the Facebook, and we're just giving out some of my trades from the chat room online. So a lot of good stuff going on here. You want to be a part of it. You want to contact me at ccooper@wallstreettrading.com so you can get the access to the chat room, and check out our website, wallstreettrading.com. In any case, let's take a look at the daily action on the SPY here. All right, we had that nice little range breakout that took place last week, Thursday and Friday, off of this little range right here. After we consolidated on top of this little prior base right here, we went up for 1, 2, 3, 4, 5 days. Now today we have a little topping tail action going on here. All right, a little possible topping tail action against that key 150 level. I do think that we see some pullback action. They may try to chop us up around here a little bit more before they try to roll us over. But if you're a bull in this market, you don't want to be buying these prices. I mean, you want to be waiting for a pullback. I wouldn't be buying up here, especially if I'm a swing trader, which I'm not a swing trader. I trade actively intraday, as most of us do in the chat room. But even if you're a swing trader, why would you even buy the market up here? You're probably better off waiting for the market to pull back to 147.20 on the SPY, or maybe even back test this 146.39 area. Try to get involved here off of this prior resistance, which now becomes support right here, like it did, and then should become support again right here against these rising moving averages. So be careful with this. We'll definitely have some stocks that probably rallied into some resistance levels that we'll be looking to short tomorrow, or some stocks that did not rally at all with the market that we'll be looking to short tomorrow. These are just different setups that become relevant when you have these certain conditions that we're in right now. So in any case, levels to watch for tomorrow. If we break below, say, 149 or I would say if we break below 148.80 on the SPY and we start holding below that level, that should give a signal to get short the market with a stop above today's highs, as that will be a break of this low from Wednesday here. All right, then we'll be looking for a pullback possibly towards 147.20. However, if we continue to remain above these short-term, fast-moving averages, which we're going to use as kind of our roadmap now, along with our key levels, all right, which would be 148. If we continue to remain above these levels right here, you got to stick with the trend. Right now, as you can see here, for the short term, for the past 2 weeks, we've been pretty much trending hard on the rising 8 EMA and the rising 5 EMA. The 20 EMA is all the way down here at 146.63. I think smart money, the smart people, I should say, are going to be waiting for a pullback to that rising 20 EMA estimate to get involved right there, and then I think we go higher. And yes, I do think we go high because the market everybody wants to buy the market. Stupid people, or not stupid people, sorry, but stupid money, I should say, bought the market today on the excitement, and we sold the market today on the highs on the excitement, bought some volatility, bought some protection, and we're able to capitalize on some of this action we had today. Now let's take a look at the triple QQQs. They were down 93 cents thanks to Apple. A little doji action or indecision candle right here. All right, we got to make sure, see if this is a trap. You can see, remember that, like I told you guys, if we can hold above 67.38, that would have been good, but no confirmation right here. And now anybody that got long yesterday, they basically got trapped on the Qs. And now we'll be looking for the Qs to come back to the 66.22 level. If we break below 66.22, we have a nice wide open gap down here between 65.15 and 66.20. Keep those levels on your books. Now let's take a look at the IWM here. IWM up 29 cents. Definitely showing some good relative strength. Definitely showing some nice momentum since, again, it's trading above the upper part of this upward channel. As you guys know, upward channels usually result to the downside, but when they break, they usually cause a nice momentum move to the top side. However, that may be halted right here on this IWM because it looks like the market may pull back. If the market pulls back, this may trade sideways to lower. If it was to not trade lower at all and just pretty much just trade sideways and hold this area and chop around a bit, then that would be a sign of relative strength. And then when the market does, if the market does pull back and then gets bounced, this will be the first index you want to go to. So obviously we need more time, but we'll be on top of it for everybody. All right, we went through the key indices. Let's take a look at the volatility index here. Volatility index was up 23 cents today. You can see a lot of crazy action again, but every time the volatility index pops, they sell it off. That's exactly what they did today. But if we can get above 13.5 on the volatility index, that will give us more clues that people are starting to buy protection to protect their positions. And let's take a look at the dollar futures. Dollar futures, they got a little bit of green action today, pretty much just trading sideways. As long as they can continue to hold below this 80.25 level, we're going to be looking for this area to be a resistance high off of this resistance high up here, which would make this an actual lower high, and maybe the dollar moves back down. But if we get back above 80.25, we'll be looking for a move back up towards 81, and that maybe could cause some pressure. Really haven't been recognizing any type of correlation between the dollar and the market. That just hasn't been, hasn't been working, I should say, or you really haven't seen that strong inverse correlation with the market and the dollar, or maybe I have not been paying close attention to it, but I usually just watch the dollar now just for the commodity sector to see if these commodities are going to get a bounce, because I am watching the gold. If we take a look at the gold futures, you can see the gold futures, They just can't seem to get a grip. They don't know what they want to do. But we do know that we have this key trend line to work off of. And if this key trend line breaks here and we start to hold below that level, which will be around, which would be actually around this 1650 on the gold futures, we should see some selling pressure all the way back down to 1630. And then if we were to break 1630 on the gold, that would not be good if you're bullish on gold. Why? Because that's this little support right here. All right, from this little ascending pattern that we had right here from the breakout that we had back here in August of 2011, last year. All right, so that's how gold's looking. Let's take a look at that GDX. GDX had a nice little breakout action on Wednesday, but then guess what, guys? Again, we were not able to break above this key trend line right here from this channel that I've been showing you guys in the past couple videos for the past month or so. And now we broke below this little double bottom right here. GDX looks to go lower. I'll definitely have some GDX stock on watch, some gold miners on watch to the short side. We'll take a look at a couple of those now and see which ones look good. But you can see the selling volume coming in there, and we have these two confirmation lower closes right here. And we actually got a close today below that key 44 level. So let's take a look at a couple of gold miners here. Newmont Mining looks to go back down towards 43, where it's going to have some support from this little triple bottom action down here. But if it was to break that level, you better watch out. Let's take a look at ABX. ABX is a weak one. It's been in a range. It's going to give you a nice little tight area to get involved to the short side if you think gold's going lower. Why? Because you could get short at 33 right here, and you could put a stop at 35, risking about $2, looking for at least a minimum of a 2-to-1 trade. So you're going to be looking for this thing to move $4 lower below 32.96 or 33, which would take it down to 29. Which, if you look at the weekly chart, it could definitely go down to 29. All right, if anything, it could definitely go down here to 31. And GG. This one, another disappointment here. Try to break back inside this channel. Now it's moving back down. Looks to go back down towards 35. So gold miners, I will have the gold miners on watch intraday for the next couple days here to be looking at short rallies in them or short breakdowns. And we'll see how that sets up. All right, let's take a look at silver. SLV, is it still above that key 29 level? Yes, it is. SLV, I want to see how SLV holds up if gold pulls back. If SLV shows some relative strength when gold pulls back, well, then when these precious metals decide to get a bounce, I'll be looking to purchase some silver, SLV. Let's take a look at crude oil, /crude oil, up 74 cents today. Still trying to chomp through this resistance right here. If crude oil could get above 97, then get above 98, we could see $100 a barrel. However, recognize we are in this little supply zone right here. Supply. And right now we're trying to, as long as we can hold above this 94 level right here, we should see this thing consolidate a bit and possibly try to push higher since the trend is up since the beginning of December. So we'll watch this as well, see how that plays out. If you guys trade the USO, you can take a look at the USO. USO was up 15 cents today. Pretty much an inside date of yesterday's action. And notice how the USO is back in that supply zone just like crude oil. Well, it's underneath that supply zone, but it's not inside that supply zone like the crude oil futures were. Kind of the same pattern, except this one's kind of lagging a bit here, as you can see. It should be really in this little area right here, maybe around 35.57. All right, so am I missing anything? I think that's about it. So let's take a look at a couple stocks here real quick. Apple, down $63 today. A gap down. Stock gap down, so it closed. Today's range had a $15.48 range, but it opened up at $4.60 and it closed on the lows at $4.50.50. Low of the day was $4.50.25, so 25 cents off the lows. Stock looks to go lower. Look at that volume we got in there today. I would say that is the highest volume spike that we have had since back in February on the 15th, which I'm not even sure why we got this. Why Apple had all this volume on this day. Maybe it had some news out or whatever, but Apple looks to go lower. If you're long Apple, you're looking to get long Apple, I would not be looking to get involved in Apple until like around 400, where it's going to be coming into a rising 200 EMA on the weekly chart. Okay. Amazon actually had a nice little pop up today. Amazon showing some nice relative strength. I do think people may start putting money into Amazon. They do have earnings coming out next week. On the 29th here, next week, Tuesday, I believe that is. And if you take a look at the chart, had a nice little move up today. If you can hold above 275, looks pretty good. Take a look at the 60-minute chart. Nice little breakout. Nice little pullback. If this stock could hold 272 tomorrow, I would be looking to get involved in Amazon for a possible move back up towards 276. So about a $4 price movement there. So good stuff going on Amazon. Actually showed some nice relative strength to the market today, being the fact that the market gave back pretty much most to all of its gains. Not all of its gains, but most of its gains today. All right, what else we got going on here? eBay, we called eBay out for a breakout out of a bull flag on the 5-minute chart, which you can see here. Pretty nice thing ripped. Nice tight bull flag on eBay. I was reluctant to buy this one. I did not buy it. A couple traders in the room bought it just because I was saying how the market could top out, and I did not want to get stuck in a high base flag pattern that breaks out then fails. So I missed a trade, and some traders in the room caught it, and that's sometimes how it goes. Everybody trades a little bit different, so I wish I would have caught that one though. But shoulda, coulda, woulda. We don't like to talk like that, as that is the worst thing you could say if you're a trader. I shoulda, coulda, woulda. In any case, that's about it, guys. We'll have some great stuff in the chat room tomorrow. If you're looking to get involved with our team here, contact me at ccooper@wallstreettrading.com. Chat room is building up. We got about 40-plus people in there now, and everything's going pretty swell over here, guys. Hope you guys had a great trading day today. I'll catch you guys bright and early tomorrow morning in the chat room at 8:20, and have a great day. Cheers.